I saw 2020 as a pivotal year where just so many things changed. And I guess there's two trends. I mean, overall that I'm witnessing. One is, with increased success in the exemption, more issuers and more companies are looking at it as a truly legitimate means to raise capital, and raise capital on a consistent basis. The second aspect of it is, an increased sophistication in issuers overall. Like in our last webinar, we were talking about, the rise of warrant portals and the use of warrants in Reg A. And, who would have thought 3 or 4 years ago that we would be talking about, doing warrants for companies and all that sort of stuff. How do you see those sort of two aspects playing, with more issuers coming in and increased sophistication? Where is the market going, and what are the evolutions that you guys see coming to play over this year and next year?
I think it's important to remember that Reg A is really a tool that allows issuers to take a unique share class structure, equity or yield-based or debt, to the masses, right? It's more about, it's historically been utilized and associated with crowdfunding, but it doesn't have to be. For example, one of our shared clients raised, I think $50 million in around 3 months, of which over half came from institutional investors, right? So I think, that's the direction I think it's going in. That's ultimately perhaps the healthiest application of the regulation. Because if institutions or VCs are investing at a similar or the same valuation as the everyday investors, to me, that seems, it feels right, right? I think with that, with the SEC signaling, granted 3-2, the increase to 75 million, I think it's gotten a lot of people's attention. I think that the rate that it's grown annually since 2012, 13, 15 to 18 to 2021 now, right through COVID, right? It didn't slow down. If anything, I think it kind of picked up because more people were home on their devices. Look, we're in an environment right now where traditional banks are shutting down, bank challengers, fintech companies are replacing user experience. People are, 70% of Reg A investors are investing on their iPhone with a credit card, right? And so that really opens up the opportunity for issuers to go direct to their own ecosystem of investors and also to others, and also to build audiences around what their typical investor profile looks like. And if you get that right, you really could in a way control the outcome of a raise. You just have to be prepared properly for it and educated properly for it.